Welcome to the Happy Retirement Show podcast. I'm Victor Gray, and today we have a very special guest for our podcast, Alecia Barnette, and she is here. She is a national traveling expert on long-term care, short-term care, any kind of care you need, but more importantly, the solutions that can be used to take care of these problems. Welcome, Alecia, to the podcast.
Thank you so much, Victor. Glad to be here.
Well, and we even have great weather for you today here in Cincinnati for your arrival.
Yeah, it's beautiful.
Yes. So, Alecia, you have devoted, I guess, your career to helping people with their health care needs, particularly at what I would call latter years, even up to end of life. I've known you for 20 years, and I don't know of anybody that's more of an expert that we've ever met anywhere in the country than yourself. So we've got a series of questions we'd like to ask.
Well, I'm here to help, Victor, and excited to share a little bit about my long-term care story and how we can help people.
All right. Let me start out with, I think a lot of people think, and I'm going by what I hear, they're either too young to look at long-term care solutions or they're too old, they feel.
Well, I would disagree with both of those statements. Honestly, you've never been younger and healthier than you are today. So the younger you are, the less expensive long-term care solutions are. And we have solutions in the industry that go up to age 87. So even on the upper end of ages, there are still solutions out there for you. So get started as early as you can, but don't think it's too late.
Now, you brought up you're as healthy today as you've ever been, and gosh, I hope that's true. But a lot of people think, well, I've got this condition or I've got something that would preclude me from being able to even apply, much less be approved for any sort of home health care, assisted living, or long-term care solution. But is that the case?
I think that's another misconception, honestly. There really is a long-term care solution for everyone. Typically, with the long-term care solutions, you'll see anything from full underwriting to simplified issue to guaranteed issue. So there are solutions, for example, you can have cancer, be receiving treatment, and still get a policy. So don't think just because you have some conditions that you will not be eligible, because there really is, again, there's a solution for everyone.
Now, I know people would wonder about this. Let's say that you're older. Let's say that you're not in perfect health or maybe not even in good health, and it would be more expensive or not as good a coverage. Something wouldn't be the same as if you were 50 and in perfect health. Is that right?
Well, that's fair in some situations. Obviously, if you're younger, if you're purchasing a life insurance solution, for example, you're not as close to death, right? Because 5 out of 5 of us die. The older you are, certainly the more expensive it's going to be. So yes, on the life insurance chassis, you're going to get more leverage. However, there's also an annuity chassis, and your leverage is going to be just as good whether you're 50 or whether you're 85. The only difference is if you have some illnesses that maybe would make you move over to a guaranteed issue chassis, the leverage might not be quite as good, but you're still getting tax-efficient leverage for long-term care.
And that's what I want to ask about. Tax-efficient leverage sounds still better than paying with cash.
100%. So even in that scenario where you likely can't qualify for one of the life solutions and maybe you're older, if you have a highly appreciated non-qualified annuity, for example, you could move that from your left pocket to your right pocket, even if you don't have any leverage at all. Everything that you take out for long-term care expenses is going to come out tax-free. So I like to call it a tax-free long-term care savings account. And that's going to be the case for any of the solutions in the industry, whether you have the leverage or not. Everything is going to come out tax efficient and tax free for long-term care services.
Now, I think there's two reasons people would want long-term care solution or plan or whatever. Number one would be that they probably are going to be able to go and be more selective if they've got more money, if they've got coverage or whatever it is, if they are able to go buy a better place to go.
100%. So it's about leverage, it's about tax efficiency, and it's about choices. And when you have a long-term care policy, it's going to give you that additional leverage. Think of it almost as an umbrella policy. So you can take all your other money and you can use it for income and for accumulation. But you're going to have that additional leverage for long-term care, which is going to allow you to stay in the comfort of your home or to pick a facility of your choice. It really is about independence. It's about family first, not finances. And now your family can supervise the care rather than provide the care.
Yeah. And, well, I've just known personal instances. You talk about family doing the care. I'll never forget one lady, and she was a client of ours, and she was helping care for her mother. Her mother, matter of fact, moved in with her, and she was telling me of how difficult this is for her and what it's done to her and, her and her husband's life, et cetera. But that wasn't what I found interesting. I said, well, don't any of your siblings help? Well, yes, my one sister does. She tells me what I'm doing wrong.
That's a story I hear every day, honestly, Victor. Long-term care doesn't bring families together. It tears families apart.
Oh, yes.
And it really, really is it's love insurance. It is about taking care of your family, letting them supervise and be there really to love on you and not wipe your brow, not your behind, so to speak.
So you brought up a love policy. I've often heard that a life insurance policy is a love letter to someone. In a lot of instances, this also can preserve and has a big thing to do with making sure that if an inheritance or leaving a legacy to your family is important, this helps ensure that.
It sure does, because if you haven't allocated something, you've allocated everything. So your money is your plan. And
wait a minute, Alecia. Say that again, because that was so important.
If you haven't allocated something, you've allocated everything. Your money is your plan.
Yeah.
Right? And as you mentioned, if you don't have a plan, your family steps in. And what is that going to look like, right? If you have siblings, obviously there can be resentment because one person often does more of the caregiving than other. So it really does allow you, as I mentioned, it's love insurance. It allows you to really keep your family together instead of tearing them apart.
Now, you've been in the long-term care industry for a long time, as I brought up earlier. What's changed in, let's say, the last 3, 5, 7, 10 years?
Oh, my goodness. Well, I've been in the business of long-term care for almost 3 decades. In case you listeners are wondering, I started when I was 10.
There you go.
So I have seen a lot of change. When I first started in the industry, it was mostly traditional long-term care. And for those of you that have heard traditional long-term care, you're probably saying, pump the brakes, I'm not buying any of that stuff. Well, there's been a lot of bad rap with traditional long-term care. I like to use the analogy renting versus owning. So some of these older policies have had a lot of rate increases, and there's no death benefit if you don't use them. So what I've seen in the last really 10, 15, 20 years even are these newer products called asset-based long-term care, and they have a benefit whether you live, whether you quit, or whether you die. And we're seeing new carriers enter the space almost every year. It's exciting.
Yeah. So a person, like your car insurance, you hope you never use it, and whatever you've spent on it, it's gone.
That's exactly right. And the same concept with traditional long-term care.
Yeah.
Even though it's probably the cheapest way to buy the most amount of long-term care, there's other ways to do that now, which I mentioned are these asset-based LTC solutions. And it's like owning your policy. So you have a death benefit if you don't use it. You have an exit strategy, meaning you can take some or all of your money if you change your mind. And of course, you have that long-term care leverage if you need it.
Now, you've heard people say this, Well, if I need care, don't worry about it. Take me out in the backyard and shoot me.
I sure have. I've heard that half a dozen or more times just about every road trip I make. Here's the deal, Victor. Are you going to know where to find the gun when it's time?
Well, the other problem is somebody may go to jail.
That's the absolute truth.
And that'll be expensive. So nobody wants to think that they're going to need end-of-life care or, develop Alzheimer's or anything that could put them in a, let's say, monetary position of needing a lot of money for care. Nobody likes to think that's going to happen.
That's right.
But statistically, it's rather incredible how many people need care.
Absolutely, Victor. I don't know if you're aware, but 70% of people over the age of 65 are going to need some type of care. In fact, 1 in 5 will need care for 5 or more years. Problem is, Victor, as you and I know, most people think they're in the 30%.
Yeah.
So,
right.
Yeah, so that's really why we want to put an emphasis on family. And if you don't use it, you don't lose it with some of these newer types of solutions.
Right. And then, so if you're a married couple and you have coverage on each with if you don't use it, you don't lose it. So what happens when the first mate dies? Does that money get paid to the spouse, or does it increase their coverage? What happens?
Well, it depends. There's several different ways that you can do this. The good news is there's 101 different ways, and the bad news is there's 100 and different ways, which is certainly one of the reasons to align yourself with a specialist. But ultimately, at the end of the day, if you have a joint plan, and you pass away, then your spouse will continue the coverage. If you have individual plans, the death benefit will pay to the surviving spouse, or some of the solutions will allow you to take that death benefit and add it on as future long-term care benefits. So again, a lot of unique ways to do that.
One thing that comes to mind as we're chatting is we'll go out and do events or meet people, or clients introduce us to their friends, and they come in, and so many times I've seen through the years where one of the, particularly if it's a married couple or whatever, they're each other's on life insurance and retirement accounts, they're each other's beneficiary.
That's right.
Even when someone is in a nursing home, they've left them on as a beneficiary to inherit money, which to me made no sense at all whatsoever.
Goodness, I would agree with you on that.
So that's something people need to be aware and cognizant of, and make sure that if grandpa's gone to the nursing home, well, if grandma dies, we don't want him getting everything.
Yeah, and that makes complete sense. We want to make sure that there's enough care, but we also want to make sure we do have the right beneficiary on there.
What we're trying to do, and why we're having you come in and meet with us and some of our folks tonight, is simply because we believe everybody should have a plan.
That's right.
And the plan should include and take care of whatever may happen.
I agree 100%. Even if that plan might not be an insurance policy, it's important to have a written plan of care in place.
Absolutely.
Obviously, if you can leverage the insurance company's pocketbook, that's the most efficient way to do it. And again, we're providing those tax efficiencies, but knowing how you're going to pay for it. Because again, if your money if you don't have a plan, your money is your plan. So knowing how you're going to fund that, which asset you'll liquidate first, where do you want to receive your care? Who do you want to take care of you? I think all of those things are important, and the long-term care solutions are a way to fund that plan.
Right. Well, I've enjoyed you being here on our show today, the Happy Retirement Podcast, and we're looking forward to hearing from you. There's different ways that you can contact us and right through the podcast. So if you have questions, you have concerns, you'd like a review, or you'd like a plan, give us a call, 513-984-5999, or just click and make sure also you subscribe, because we're getting thousands of subscribers now. So goodbye to everybody. Thank you for being with us today.
Start building a more secure future for you and your family. Take the first step toward financial clarity by scheduling a no-cost, no-obligation consultation with Grayhurst Wealth Advisors. See if we're the right fit for you by scheduling a consultation. Call us today at 513-984-5999 or click the link in today's show description to get started.